Hello, everyone. This is AJ with FPS Securities, bringing you our first educational series on technical analysis. For today, we will be covering one of my favorite technical analysis methods, which is utilizing gaps in your trading strategy. And yeah, we'll just kind of get right into it. S- So first and foremost, this is for educational purposes only. This is not a investment advice. So things we'll cover in this series. So we'll go over some basic types of technical analysis, and then we'll kind of get right into, what is a gap, some use cases, and of course, how to sort of find them and utilize them in your trading. So there's a lot of different ways to trade with the market. There's tons of different methods for technical analysis, trend lines, Fibonacci's, market profile, volume profile, which is also one of my favorites, moving averages, patterns, and things like that. But for the purposes of this video, we'll cover, I think, one of the most underutilized sort of features, which is gaps. So a gap is basically when the price of a stock opens up above or below the closing price of the previous day. And typically these will occur off a earnings movement, some news events, or it could just be for market variance. If the markets are gapping up, gapping down, etc., then the stock will typically follow as well. But there's two main types of gaps. One is when the price closes above or below the previous day close, and then one when the price closes above, or sorry, opens above or below the entire previous day candle or an entire area. And we'll kind of get into some examples and things like that. So just wanted to show, this is a typical gap. I'm just using it in a bullish instance where we have the previous day close and the current day open, which is above the previous day close. So you create this gap in the price, and technically this is a very strong gap because you're opening above the whole previous day candle. In this case as well, this is still considered a gap if you see there is a wick in the price, but from the closing price, we did open higher above that for the current day. So there is a small gap here that people tend to not utilize or just ignore, but this is also a gap. And we can kind of, and we'll get right into, some examples and things like that. So the use case for gaps, I've just listed some things here. So one is, of course, like the gap and go strategy. When a stock that gaps higher or lower, typically have some momentum in their favor to continue higher or in that direction. In this case, I only want to talk about gaps that are opening higher. I don't really like to short, any stocks and things like that. I only try to focus on momentum going higher. So we'll just, for the rest of this series, we'll just kind of focus on the bullish case. So another use case for gaps is that if you're looking in a trade, or if you're looking to get into a trade, gaps can also be targets. So we use the term gap fill, and typically, on to the point three, is that whenever these gaps fill either on the upside or downside, they can act as support or resistance. Hence, we use them as targets as well, which kind of help you, again, just kind of give you some sort of reference points and things like that. So like I said, gaps help identify bullish momentum. And if you look across most of the charts, any bullish momentum or any strong move for any particular stock, you typically always starts with a gap. And so the best thing to do is kind of, keep a watch list of stocks that are gapping. And then, from there, you can look at any of the other technical analysis sort of features I mentioned, and you can, utilize those. And, that's probably one of the best ways that you'll realize that, hey, when a stock is gapping higher, it typically changes the whole structure for the stock. So more advanced use cases for gaps, which we'll be covering a little bit more into depth, is that when you combine these gaps with trendline supports, this is kind of known as flipping trend lines. And again, in this case, we'll just kind of look at a on the bullish side. So it's a very bullish momentum or a very bullish occurrence whenever this does happen. And so also another use case is if a stock gaps in the complete opposite direction of the trend, the participants are usually very offside and it creates more panic, which can also be a very bullish or bearish thing as well. So we usually call this a trap gap. And then, of course, like I said, you have these hidden gaps that can act as key support and resistance levels. I like to use the hidden gaps more with the index, like S&P and Nasdaq. With individual stocks, it's a little bit more tedious to do. But I like to use these hidden gaps on the S&P and Nasdaq, and mainly on the ETFs and things like that. And then we'll also kind of cover into what's called an island gap reversal. So I'll go right into some examples. This was actually just a couple days ago. After this 13F filings came out, a lot of people were very bullish on Grab because some hedge funds and other companies were increasing their exposure to this particular stock, and it was gapping over from Friday to Monday. Now, the instance is, how do you sort of enter into a trade like this, right? So technically, now if you can draw a trend line, you'll see that, the price obviously opened here. Would it have been a good entry? Maybe, maybe not, but it did find support onto the trend line for both days, and now you at least had a tradable event where you could, scalp this or trade for however whatever time frame you're looking at. But at least provides you a good entry point, and as well, it gives you a very good idea of where to keep your stops. Right now, if you know this the stock gets below the trend line, then at least you can have your stop somewhere around there. But it gives you a very good idea of where to sort of enter, and gives you a good idea of your exit as well. And I think that's probably the most important aspect of any trade is you want to identify those stops and profit targets before you enter. Five nine is an example of an island reversal. So basically, what you have here is, again, it was based off two earnings events. So you had this large gap down, large consolidation for basically a quarter, and then for the next quarter you had a gap up. So basically, this is known as an island reversal because you're in between gaps, and now whoever was typically, or whatever the participants were short in this period, they get thrown off their position. They have to again cover, and now you have some bullish momentum to the upside. This one isn't as strong, but I just wanted to show you an example of what an island reversal would be. And on the flip side, an island reversal top would be the exact same scenario. Just if you flip the chart upside down, you'll be able to see that as well. Now, I wanted to show you again some couple more island reversals on SPY. So I'm looking at the 1 hour chart for the S&P, and again, you can kind of see that on this day we had price gap lower, and I believe this was actually the election gap. So we had some consolidation, and then after election day we had this gap higher. So again, you had this island gap reversal, and then now you had some continued bullish momentum to the upside. And actually, right here you also have a bearish island top reversal as well, right? So you had price gap up, had some consolidation, and then a gap down as well. So all these participants are typically trapped. And so again, if you're long, you're probably going to look to cover or sell your position, and create some panic on the downside as well. So this is what I would call a hidden gap on the S&P. So if you're looking at this on a daily chart, you wouldn't notice a gap in price unless you're sort of more familiar with the structure. But if you look on the 1 hour chart with the extended market off, you can see that again we had this price closed here, we gapped lower, and now we gapped higher as well. So this was a island reversal again, and whenever you typically see these island reversals, you'll see some continuation movement higher just because all these participants are caught off guard, and they have to force a cover or they have to buy the move higher, etc. And then now you can see we also created two gaps on this process as well. So again, a very bullish move, and this was just this year's, in fact. So an example of a trap gap, I'm using this stock, Serve Robotics. So basically, you had price in this case close at the very highs, and then some negative news came out, and the whole stock just for the next day it gapped completely below the full candle, and even some previous support areas as well. So this is technically a very bearish momentum, and you can kind of see, if you had one continuation day to the downside. I usually don't. Again, like I said, I don't like to short stocks too often, or very often at all. But this is an example of where the setup was there. But again, I don't like to take the short side in most instances. But I'll show some positive or some bullish trap gaps as well. So this was another very popular stock this year, HIMS. We saw some more, had it started off with some gaps, as you can kind of see down here, and then, some more gaps higher. But then, this was a really flipping point, what I was referring to as the trend line flip. So basically, you had this trend line, and then the next day you had this gap higher, and then it back tested the trend line, and you saw this really strong move out the gate. So, gaps are bullish, but now if you're flipping previous trend lines and things like that, it becomes a very strong catalyst to at least continue higher. I'll show this example of Garmin. I had this. I'll show you the chart. I didn't want to post it because it was quite a bit. Um, so if you can see my screen, yeah. So when it comes to Garmin, you had let me start here. So when you had this trap gap right here, where actually, sorry, it was right here. I couldn't remember. So yeah, so again, you had price close at the very lows, and then the next day, from whatever news event, we had this price completely gap higher above it, and you had this nice couple day momentum, some consolidation, and then of course you had your continuation and whatnot. Um, and then if you look at this first large gap here, this was an earnings gap. So now again, you had the continuation, and like I always say, you want to keep a watch list of stocks that are gapping higher because that's the ones that are going to have the current, the most momentum moving forward. These are stocks that will also kind of consolidate and then have that move higher depending on what stage the stock is in. Right, so now again you had this first large gap higher, then you had another gap followed by another gap, and then now it's fourth, and now it's fifth gap. Technically this fifth gap I would expect it to be very oversold, and it's kind of getting into a late stage for the stock, but you can kind of see that the gaps, once there is any change in story, change in earnings for the stock, that bullish momentum will kind of continue in that instance. And I believe this was a trend line flip as well. Uh, oh, I guess no, not in this case. But again, also this was almost a sort of a trap gap where again you price close at the lows, completely gapped above it. Um, Yeah, I mean a very, very powerful stock or sorry, move that again just started from one gap and that sort of momentum higher. And now of course this is live. I would expect, maybe this gap not to hold since this is the fifth gap higher and but again, always want to pay attention to stocks that are sort of having that any sort of gaps and start moving higher. So GDS was another one. So you had this minor gap here, and then whenever that gap filled, it did act as support. And then, of course, when it gapped higher from earnings, you saw that this previous resistance area was acting as support. Saw the move higher. So again, just showing that if you're utilizing trend lines or even just basic support and resistance levels with gaps and it starts to flip those areas, it becomes a very strong move and you kind of want to stick with that stock or just at least have it on the watch list to, sort of monitor for more technical patterns and things like that. So the last one the last one I'll cover here is RBA. So again, very strong example of when you're flipping the trend line. Again, off a earnings move, you had the support over here, and then you had this continued move higher. Now, when it comes to the trade time frame for gaps, it really just does depend. It could be a day trade, it could be a couple of day swing. Just also depends on how extended the move can be. But nevertheless, you'd still want to have the stock on your watch list. So how do you find these gap trades? So the best way to utilize it is to have proper scanners. So there's some free websites that I have listed. I'll post those in the description as well. But with some of these websites, you can kind of see the pre-market gaps, and you're at least able to sort of see what stocks. Then you kind of have to go in and manually draw some trend lines and stuff like that. But a lot of the work happens in the pre-market area, and then. For free scanners, there's also like TradingView and Thinkorswim. I use Thinkorswim, so I have some scanners set up. But I also used TC 2000, which is a paid platform. And their feature was really great because it would show the pre-market candle on the chart. So now when it comes to drawing or looking for any sort of trend line support is much easier. But again, it's not a necessary thing, but it is a very convenient and pretty efficient manner to use a platform like that. And then, of course, the pros for gap, just trading gaps is they're very strong when the proper setup is identified. And there's always like, multiple different setups to kind of take advantage for. Like I said, the island gap, if it's just a normal gap or off earnings news. And of course, if you're looking at any trend line flips, etc. And then, of course, the risk to reward is very easily identified if it does have, gap above a trend line or any sort of large island gaps. You at least are able to identify that stop area, and then, you can identify the targets as well, which is very important for entering a trade. And then I think this is actually the most important thing. It increases your exposure to a large variety of stocks. If you're continuously scanning for stocks and looking at, stocks that have momentum, you'll start building your watch list. You'll have a very large watch list to kind of pay attention to, and then from there, you can get into a little bit more in-depth of setups where you're looking at different sectors. You're seeing which sectors have strength, and you can take advantage of that as well. But I think this is actually the most important part is that you start to have a large variety of stock lists and exposure to a large variety of stocks. Now, the cons is that the setups can be very hard to find. It does require a lot of patience. You don't want to force any of these trades. And then, of course, like you need to utilize the proper scanners. And, some issues that I've also ran into is like you might not have a lot of time to react right now out the open. If the momentum is really strong, the stock can just take off and you won't have any time to place any orders, which has happened a couple times, but that's just kind of one of the cons. Then yeah, if you have any questions, please feel free to reach out. I'll drop a couple more videos with some other sort of technical methods. And if you haven't already, please join our WhatsApp community and follow us on socials. And look to drop more educational content, some stock charts, market updates, and things like that. Yeah, thanks so much for watching.